You know those moments when it feels like the world changes in an instant? When years of calm are just shattered in a matter of days? What if everything you thought you knew about the market was about to get tested hard? All right, let's get into it. Today, we're going to break down a massive market meltdown. We're talking about a crisis that was lit up by a crazy fast series of global events. We're going to see exactly how it all went down. Here's how we're going to trace the dominoes. It starts with a geopolitical spark. That causes oil prices to just explode. Then inflation makes a shocking comeback, which leads to a massive market sell-off. And finally, we'll look at the shockwaves and what history tells us about all this. You know, every fire starts with just one spark. For the markets, this particular fuse wasn't lit on a trading floor in New York. Nope, it was lit thousands of miles away, in one of the most on-edge regions on the entire planet. Just listen to that. What's so wild about this is how blunt it is. This was a straight-up, in-your-face promise of chaos that sent an absolute chill through global markets. And things just spiraled out of control, incredibly fast. First, drone strikes hit a US embassy. The US starts pulling people out with emergency evacuations. And then bam, missiles are flying toward Tel Aviv. Every single headline was just another step up a ladder that investors absolutely hate to see. So, let's talk about the first big economic domino to fall. It immediately set the energy markets on fire, basically pouring gasoline on this growing blaze of global economic fear. And the reaction was anything but subtle. Just look at this chart. It tells the whole story. You've got West Texas crude up 7%. Brent crude, that's the big global benchmark, it's up a whopping 13%. Even heating oil is up 13%. This is what panic looks like in real time. So, why did one threat cause so much panic? It all comes down to this number right here, 20%. A full 1/5 of the entire planet's oil supply sails right through that tiny little waterway. So when Iran threatened to close it, they were threatening the lifeblood of entire economies.
Okay, on to the next domino. Just when everyone thought, phew, inflation is finally cooling off, the oil shock brought it roaring back. And there was one single piece of data that just completely crushed the market's hopes.
And this right here, this is the number that broke the market's back. All the experts were expecting a pretty tame 0.3% rise, but nope, the actual number came in way hotter at 0.5. It literally doubled the forecast. Wall Street was caught completely, and I mean completely flat-footed. And this is why that inflation report was just so devastating. See, the whole market was counting on the Federal Reserve to start cutting interest rates. It was the one thing giving everyone confidence. But with inflation spiking like this, forget it. The Fed's hands were tied. Rate cuts were officially off the table, and the market safety net just vanished. Which brings us to the grand finale. You've got geopolitical fear, an oil shock, and inflation panic all hitting at the exact same time. The dominoes finally came crashing down in one massive market-wide sell-off. And here it is, the headline number that flashed red on screens all over the world. The Dow Jones dropped about 850 points in a single day. This wasn't just a little dip, this was a full-on rout. And it was driven by nothing but pure, raw fear, you name it. And where did it go? Straight into energy and defense companies. It's a classic risk-off move happening right before our eyes. So after a nosedive like that, it's pretty easy to feel like the sky is falling. Let's zoom out and put this whole crash into its proper historical context to see what we can really learn from it. This data from the European Central Bank shows us something really important. Geopolitical shocks, as painful as they feel in the moment, are nothing new. I mean, you can see their impact on growth right here on this chart. And that leads us to the single most important question any of us can ask in a crisis. After all that chaos, after all that panic, is this time really different? Well, history gives us a surprisingly clear answer. Markets absolutely hate uncertainty, no doubt about it. But they adapt, and they adapt incredibly fast. Get this, the average recovery time after a major shock to get back to where things were, less than 39 days. The big lesson here is that the health of the economy matters way more than the event itself. Shocks like this rarely take down a fundamentally strong economy. But that leaves us with one crucial, lingering thought. History shows a strong economy can take these punches. But what happens when the next big shock, and there will always be a next one, what happens when it hits an economy that's already weak and fragile? Now that is the question that should keep all of us thinking.
If you want to keep making sense of the powerful forces that are shaping our world, make sure to subscribe for more insights just like this. Thanks for watching.